So, hello traders, I'm Sajid. Welcome to my channel Pips Mastermind. In today's video, I'm going to give a complete breakdown of my personal trading strategy, which is liquidity graph setup. So, basically, my strategy is built on three pillars. Okay, the first thing is market structure, second is the support and resistance, and the third thing is liquidity. Okay, so my strategy is a combination of these three things. I am trading this setup from past maybe 2.5 3 years, and this is the same strategy which I'll be trading on the live streams. Basically, first I'll give you the outer look of my strategy, then I'll just go through a complete checklist of my trading strategy which I have made by journaling my past trades, okay, all the mistakes and all the stuff, and then I'll show you examples so that you can understand my strategy more better. So let's start, guys. Fine. Here, first I'll show you my setup for buying, okay. First thing what we have to do is we have to wait and see whether the in the 15-minute time frame. Now the time frame which we'll be using is 15-minute and 5-minute time frame. Okay, in the 15-minute time frame we have to see what's the market structure. Is it higher high and higher low, or lower low and lower high? Okay, so fine. If the market in the 15-minute time frame is forming this structure where it's bullish, then I have to look for the buy side trade. Okay, when the market structure in the 15-minute time frame is bearish, then I have to look for the sell side trade. Fine. And where will I be looking for buy side trades in the 15-minute time frame is in this lows. Whenever the market makes a higher low, I have to look for buying setup in this lows in the lower time frame. Fine. And whenever I have to go for selling, I have to look for sell side trade on this higher lows. Okay, in this lower high, sorry. So here I'll be planning the buy side trades, here I'll be planning the sell side trades. Fine. So the first thing what I'll be doing is I'll see whether the market is fine. It's like making higher high and higher low, then lower low and lower high in the 15-minute time frame, so that I can decide my bias, like which side I have to go for this session. Fine. So the second thing which I'll be doing is I have to mark a support zone. Okay, so if the market is like bullish in the 15-minute time frame, then I'll go look for a support level like this. I'll mark it as green color. Here there should be around 2 to 3 taps minimum this support, like maximum this support level. Fine. So market comes down, first tap, then again it goes up, again comes down, second tap, again it goes up. Then the third time, if the market breaks this support level and comes down like this, fine. Here what's happening is the buyers who have entered here, right, on this swings, their stop losses will be down here. Market just triggers their stop loss and now they're out of the market, right? So there are no buyers, like the retail buyers in the market now. Then the second thing what happens is, after this breakout of the support, the retail traders start selling. So here the sellers get entered and their stop losses will be collected here, right? So now simple thing what we do is, market just goes up and reverses like this and hunts the seller stop loss which is present up, and then it gives a upside movement like this. So we usually look for this thing to happen where the buyers are out of the market and the sellers are entering and the market is going to hunt their stop losses. So this is my outer look of my buy side setup. So if I talk about the sell side setup, it's the same. It's basically the same. Okay. So again we have to draw a resistance level. This is the resistance level. I mark it as red. Same, two taps. Okay, 2 to 3 taps. One time it came to the resistance, fell, one tap, then again second tap. After this, if it breaks this resistance level here, again the same thing happens. The retail sellers who were present here on this resistance level, the stop losses are above this. Market removes them, like from the market. Right now, there is no sellers available here. And after this breakout, fresh buyers start building the position for the buy side trade, thinking that the resistance is broken and the market is gonna go upside. So their stop losses will be present here down. Then the next move, what the market does it just traps these buyers and gives a downside move like this. Okay. Again, when there is a sell side trade, we look for this thing to happen. Fine. So this was the buy side and the sell side setup outer loop. Okay, now we'll just go deep into it. I'll just show you my checklist. By showing that checklist, I'll just explain you what do I mean. So this is a checklist, okay, and I am very much strict about my checklist. If whenever I'm taking a trade, I always follow this. Most of the time, if I follow this checklist 100%, the trade goes into my favor. If I try to break any of the rules, most probably the trade fails. So the first point here is trade time window. This is very much important because forex market is 24 hours open. You cannot trade whenever you want because there is specific key time windows where the actual money flows in, so there's good volume and good volatility in the market. That's what we need. Okay, we don't need like the sideways market, right? So first, for London session, the timings will be 12 p.m. to 2 p.m. Okay, this is Indian Standard Time, IST. Okay, so for the New York session, the timing will be from 7 p.m. to 9:30 p.m. During this time only you have to look for your trading setups. Except this, even if the setup is formed, please avoid it because most probably that setup is gonna fail because there is not like so much liquidity present in the market that it can give good moves from there. Maybe your setup is formed out of this trade time window, you enter, you may get 10-20 pips and then it will just reverse and hit your stop loss. So if you want to capture really huge moves, you have to trade between these timings. Okay, so trade time window is done. The second thing, how to mark the level, support and resistance zone. Here, mark full wick plus 1% of the body, zone not a thin line, then clearly defined with 2 to 3 taps in the 5-minute time frame. Liquidity setup forming. What does it mean? Mark full wick plus 1% of the body. I'll just show you here. Okay, so this is the chart of Bitcoin. This is the 5-minute time frame. Now here I can see a resistance level. Okay, this is a, what now we have to do is we have to join this wick. Okay, so basically this line in this candle is called wick. We have to join this wick and 1% of the 1% of the body, right? So I have joined the wick and 1% of the body so that we mark more accurate zones. So now how many taps are there in this? 1 2 3. According to my checklist, I have marked my like resistance level where I have marked the wick plus 1% of the body. Then I have marked clearly defined 2 to 3 taps. Okay, so now this is a proper valid resistance level. So this is how you have to mark your both support level and your resistance level. Let's move to the next point. Okay, so this is the next point. Bias confirmation on 15-minute time frame. So I've told you right how to like fit your bias, like how to confirm your bias uh, in the starting of the video where the market is making higher high or higher low, then lower lows and lower high. If market forms this, you have to go for buy side. If market is forming this, you have to go for the sell side trades. Okay, then the same thing, is price making higher high higher low, then it's bullish, or lower high or lower low, then it's bearish on the 15-minute and 5-minute time frame. Now everything whatever you're doing here is in 5-minute time frame. Okay, then stick to one bias per session, London or New York. You cannot be like both buying side and selling side at one, like in one session. So I'll just give you an example what happens if you don't have a bias. There is a resistance level here, it get breaks out, then you go for a buy side trade here. Okay, now this reverse and hit your stop loss. If you have a like bias of buying, you'll just take a buy side trade. If your stop loss hit, you'll just stop there. Okay, but if you don't have a bias, then you'll think that okay fine, this breakout has been filled, now I'll go for a sell side trade. Go for a sell side trade, again it will reverse, it will hit your stop loss. Two stop loss got hit, then the same thing again you'll go for buy, the market will become choppy here sideways, and this is how your market will just get blown away. If you have a bias, you'll either go for buy side or a sell side trade. Only you'll get only one stop loss. If your like if your analysis is wrong, then you'll just stop. Okay, so it's very much important to have a bias for that particular session. Then the fourth point, entry setup for buys. Okay, here the support should be broken. Two 1-minute candle closes below this support, then bullish reversal, trend line drawn, then entry on trendline break plus reclaim of the level. So I'll just show you on the chart how it has to be marked. Fine. So this is the support level. I'll mark it as green. One tap, two tap. Then this is the third time where the market is coming down. Okay. So in the 1 minute time frame, we need two candles to close below this level. Okay. So here two candles have been closed below this level. Now what we have to do is, after two candles are closed below these two levels, we have to draw a minor trend line, something like this. By joining these two market structure, we have to draw a minor trend line level, for example something like this, and then a bullish reversal. If market reverses from here, breaks this trend line and reclaim this support back, what we have to do next is we have to go for a buy side trade from here. Our entry will be here, stop loss below this level, target how much ever, like my target in particular trade is mostly 35 to 50 pips. If you want to target the next resistance, you can do that. After doing the entry here, most probably the market will just go and hit your target like this. Okay, so this is how the actual setup looks like. Okay, for the buy side trade, you have to make sure that there is minimum two candle closing below this support. Why is it important? Because see, this is a breakdown right here. It's the time when the sellers are going to enter. So if there is just 1 minute, more sellers will not get enough time to enter, right? So basically what happens, if there is less sellers entering here, there is less stop loss above this level. That means there is less liquidity for the market to give a upside movement. So I always wait for minimum two candles. There is no maximum limit. Minimum two candles to close below this level, so that there is enough liquidity for the market, enough stop losses of the sellers here, that it can give a reversal and it can give a upside movement. Fine. So this was for the buy side entry. Now I'll just go back to the checklist. Okay, for buys I've shown you. Now for sells, resistance broken, two 1 minute candle closed above, then bearish reversal, trend plus trend line, entry on trend line break, reclaim of the level. Same thing. Draw a resistance level here. Okay, I'll just put it as red. Okay, one tap, two tap. You have to mark this level on 5 minute time frame. Okay, then now slowly market starts coming up back. It gives a breakout here. After giving a breakout, what we have to do? Wait for two 1 minute candle to close above this level. Okay, it should close above this level. Now two candles have been closed above this level. Fine. So now the market have got enough liquidity, enough buyers, stop losses down here, because it's a breakout of a resistance, right? If it gets broken, the buyers will start building the position, the stop losses will be down. Two candles have been closed. That means there is market has given enough time for the buyers to enter for the buy side trade. So now the stop losses are down here. What we have to do is draw a minor trend line down here, something like this. You have to just draw. Okay, after this a bearish reversal. After bearish reversal, after this minor trend line got broken and the market again reclaims this resistance level, you have to make your sell side trade entry here, stop loss about this level, TP whatever you prefer. Then most probably the market will just hit your TP like this. Okay, so this is the entry setup for sell side trade. Fine. We have to watch this video 2 to 3 times more so that you understand it more clearly. I'll just show you the next, what's the next thing. Okay, so here this is the most important part of the entire checklist. Okay, so please listen to it very much carefully. First thing, entry filters. Okay, if what are the things if it happens, we have to avoid our entry. Fine, to separate our A plus setup and non A plus setup. Basically, you have to always trade your A plus setups. Fine. So here, first point, has price already moved 20 pips plus after a breakout? Wait. Okay, this is the most common thing which happens with this setup. Okay, so for example, uh, okay, here what happened is, I'll just back. Here the market gave a breakout, and this we have to use this scale, measuring scale, and we have to measure that is it more than 20 pips. So here the 20 pips level is here, right? So here is the 20 pip level after the breakout. Market has given more than 20 pips. Fine. So now what we have to do is, if the market comes to your entry level like this, you have to avoid this entry. Why? Because if the market is already traveling from such a long time, it's like traveling from 30 pips, 35 pips downside movement continuously. So you have to always wait for a pullback. Let the market prove that it's coming down, okay? Because it's falling from a long time. Now it needs a pullback. It will give a pullback. Then what you have to do is, again, if it crosses this level, you have to draw a new trend line like this, join these two levels, and here in the second entry will be your entry point, stop loss about this level. Now what happened here is, here the market has proven that now it's in a bearish structure. Okay, so this is a lower high, lower low, lower high going to form a lower low. You enter here, market will just go and fall. So always make sure whenever the breakout is more than 20 pips, avoid the first entry, let market take a pullback. Again, when it crosses the same level, enter on this level, then you'll just most probably it will hit your target. Fine. So this is for sell side. Even for the buy side, it's the same. Whenever the breakout is more than 20 pips, avoid the first entry, go for the second one. Okay, so hope you understood this point. Fine. So this is the next thing. Okay, did a strong candle just close, wait for a pullback? What does it mean? Just close all this. Okay, so here there is a resistance level here. Fine, there is a resistance level here. Just remove all this. Now during a breakout, what do we actually need is, the breakout should be very much slow. That means the breakout should be not, it should be a weak breakout, not a strong breakout. If suddenly when there is a breakout being formed and the candle just quickly forms a big candle like this, what does it show? Okay, it shows that the buyers are in control now. It shows that there is strength in buying here. So it's better not to expect a reversal from here. Even if the market reverses from here, always wait for a pullback, then enter on the second entry. Let the market prove that it's gonna fall, then enter. Okay, so don't enter blindly after a big breakout is formed. It clearly showed that there is volume in the buying side. Don't expect a sell side trade from here. So this is the second point. Whenever a huge candle is formed, wait for a pullback. Okay, so next, the third point here is the trend line clean and obvious? So here what this point means is, whenever you draw a trend line like this, what is trend line? It just shows that the structure is still in bullish or in bearish. Okay, so it shows the trend of the market. So you have to always make sure the trend line which you're drawing is clean. If it's not clean, then please avoid the first entry, go for the second one. Okay, so after joining this trend line where all the tabs are like clearly aligning with this trend line, if it crosses this level here, it clearly shows that the trend is now bearish. If the trend line is not clean, it's not obvious, then what does it mean? The market can be still in a bullish trend. You just draw a wrong trend line and then you short here. There is another trend line which is formed something like this. It will take support from here, hit your stop loss, and then again start continuing going up. Okay, this should not happen with you. So always make sure whenever you draw a trend line, it's clean and it's obvious. So the next point, is there a new 5-minute candle open your entry near entry, then and does it open? If there is a new 5-minute candle open near entry and it does not have a top wick or bottom wick, wait. This is a really very much important point. So basically this is our entry point, right? Okay, so this is our entry point. We have to sell from here. Okay, so this is the 5-minute time frame candle. Okay, so this is a sell side candle here which is being formed. I'll mark it as blue color. Okay, then the next, this is our entry point. So now here a 5-minute candle closes and new 5-minute candle is opening here. Fine, if a new 5-minute candle is opening here, always wait. Okay, don't enter blindly. Whenever a new candle is formed in a 5-minute time frame, you have to, if you are going for a sell side trade, that candle must have a top wick. What does it mean is, market open here, you will enter here. Okay, the market will go, the candle will go up, hit your stop loss, then it will form a top wick, then again it will start to continue down here. So this is a top wick. So if the market, if the candle does not have a top wick, always wait for the top wick to be formed, then go. You'll enter here, then you'll have your stop losses about this level somewhere here. Then a new candle will be formed. It will just go up to form a top wick. It will remove you from the trade. It will form a top wick. Then again it will just go into your direction. So whenever near your entry a new 5-minute candle is being formed, always wait. If you're going for a buy side trade, always wait for the new 5-minute candle to make a bottom wick first. Let it come down. Okay, have some patience, let it come down. Then let it make a bottom wick. Then again, if it comes above this level with a wick down here, then enter at this point, so that there is high chances that now the candle has a bottom wick and now the candle is fully complete. It can give a upside movement like this. Fine. So always make sure whenever your entry is being formed, always you wait for a new 5-minute candle top wick or bottom wick. And basically why am I telling 5-minute time frame is, whenever a new 5-minute candle is formed, okay, there is a new 15-minute, 30-minute or 1 hour candle being opened at that time. So each and every candle, if the market has to go down, it has to first form a top wick, then only it will push down. Same way, if the market has to go up, the candle will first form a bottom wick, then only it has to go up. Fine. For example, I'll just show you the same candle. Okay, just observe here. This is a sell side candle, right? This is a bearish candle. The market opened here. The candle opened here. Sorry, it went up. It went up from here. What does this wick shows? That the market, the candle tried to go up, but the sellers here were more stronger than the buyers, so it just flipped this candle and made a bearish candle. So this wick shows that here the sellers have pushed, dominated the buyers, and now they are pushing the candle down. So whenever you just look at any bearish candle, there is always a top wick here, and whenever you look at any bullish candle, there is always a bottom wick. It's a very much rare chance that any bullish candle will not have a bottom wick, or any bearish candle will not have a top wick. So you have to always wait for the wick. Okay, don't rush. So the next point here, okay, after a minor trendline break, check if a major trendline is forming near your entry point. This is also very important point. Okay, fine. So here there is a resistance level being formed. This is the third type. Okay, market gives a breakout, then it's reversing here. What do you basically do at this point? You draw a minor trend line. Okay, this is the minor trend line. If these two breaks, then you will just enter here, right? So this will be your sell side entry here. Here it will be a sell side entry. But you have to also see this is a minor trend line. But you have to also see if there is a major trend line being formed near your entry. This minor weak trend line got broken. But if there is a major trend line, strong trend line also being formed near your entry, that means it's your sign to just stop, because the weak trend line has been broken. That does not mean even the strong trend line will be broken. If the weak trend line is broken, it sometime what happens is it will just take the support from the stronger major trend line and it just gives an upside movement. So you have to always make sure near your entry there should not be any major trend line. Fine. If there is a major trend line, wait, don't take any entry, let the market bounce up from the trend line. Again, if it crosses this level, if it breaches the major trend line, go for a sell side trade. Okay, don't rush for entries. So this is the another point where you have to see that there is no major trend line near your entry point. Okay, so the next point, a quick flashy candle formed during your entry, avoid it, wait for the second entry. Okay, so here this is your entry level, right? I'll just delete all this. Fine. What does a flashy candle mean? Like here, market is making small candles here. Okay, it's making small candles and it's giving a upside movement here. Suddenly, what happens? A big fast reversal candle comes like this. It comes very much quickly. Okay, with very much high volume like this. So whenever this kind of candle is formed, right, you have to be very much cautious here. Why? I'll just explain you. Whenever this kind of candle is formed now, this is basically to trick the retail sellers here. Why it happens here is, whenever such a big huge candle is formed, the retailers think, okay, fine, this candle has lots of volume, this candle is strong, let me just short here because it may just fall from here. But the reality is it will just make you enter, then the next candle only, the candle against you, it will just go up like this, then it will remove you, then it will start falling. So whenever this kind of flashy candle, right, a quick candle forms, you have to always wait. Okay, don't enter there, because after, whenever you see, whenever there is a huge or a quick candle is formed, always the next candle reverses from that candle, from the previous candle. So this is the another point where you have to avoid the quick flashy candle, avoid the first entry, go for the second one. So let's see for the next point. Okay, if the market is sustaining holding before the breakout, avoid that level. Again, an important point. So basically what here I'm trying to tell is, again I'll draw a resistance level here. Fine. Here this is third tap and market starts to sustain here at this point. Then it gives a breakout. Here at this point you may be thinking, okay fine, the sellers are getting removed, the buyers are entering. Now I'll go for a sell side trade from here. But no, what's happening here is the market is building internal liquidity. That is, you are like waiting for the market to grab the buyer's stop losses, the buyer's liquidity, and to fall from here, right? But what the market is doing is it's inviting the sellers here again and again and again. So they so that the more and more sellers enter here, the more and more stop losses to be present at this point. So what the market does, it just collects so much, like the stop losses of the sellers here, that it does not have to grab the buyer's stop loss, then like make a downside movement. It has got enough liquidity here. After this, the market will just give a blast for the upside, and then we'll be waiting for a reversal. Then the market will just be going higher and higher and high. So always, whenever the market is consolidating or like holding near a support or a resistance level, please avoid that level, because most probably that trade is gonna be a breakout trade, not a reversal trade. Okay, so this was one point. Then the next point, sorry, okay, wait for the market to cross the level properly, no early entries. This has happened a lot of time with me. Fine. So what basically happens is, here the market gives a breakout, it starts reversing sometimes just to make my stop loss more smaller, because I feel like, okay, fine, here anyways the market is gonna cross my level, so let me just enter a bit early here. So I enter here at this point, I keep my stop loss here, I keep my target here. But what is this, like after the support has been broken, it just convert in, like after the resistance is broken, it just converts it into a buy side trade, right? Like, sorry, after support is being broken, then it converts itself into a support, right? Whenever resistance is broken, then it forms a support, then it goes up from here. So at this time it's on a support level, okay? So if I enter here, there is high chance that the market can again go and give a upside move from here. So always wait for the market to prove, to let it cross and break this level and come below this level, so that you can enter here. The market has proven that now this support level is not valid. You can short from this side, and then you can expect a downside move. Okay, so always wait for the market to close in your direction, then only enter. Don't do early entry thinking that the market will go into your direction. It may not happen also sometimes. Okay, so after explaining so many entry filters, the last thing what you have to ask yourself is setup like, is my setup a plus? If not, noted. Fine. If there is no two candle closing, if there is a strong candle, or then there is a new 5 minute candle opening, flashy candle, if all this is there in a, like in a particular setup, when your setup is being formed, then that's not our a plus setup, please avoid that. Then if all this does not happen during our entry, that means this is the a plus setup, you have to enter there because it is a high probability trade from there. Fine, so let's move to the next point, that is trade management. This is my personal trade management, how I do it. So after my entry, I always keep my stop loss 10 pips. Why do I keep it so small? Because I am trading on a liquidity, okay? This is like if I'm shooting a bullet from a gun. Now once I have like pulled out the trigger, the bullet is out of the rifle. That means it has to go front, right? It cannot reverse back. The same way, here when the liquidity is being grabbed, after my entry it has to fall, it cannot come back. Okay. So if it reverses from here, that means my analysis is already wrong. It has proved it. So why should I just keep a big stop loss and give big loss to the market? I'll just close it here in 10 pips in a very much small stop loss, so that I protect my capital, okay, for long term. Then my TP I keep, that is 35 pips, because it is more easily achievable. Sometimes some trades I have noticed it gets go, I aim for 100 pips, 50 pips, it gives like 35, 40 pips, then it just reverses from there and hits my stop loss. So I have kept that. I'll keep my TP 35 pips, so that more and more TPs will be like hit, and I can make consistent profit. Next, trail your stop loss cost to cost after 20 pips move. This is your entry, this is your stop loss, this is your 35 pips TP. After entry, the market has moved 20 pips in your favor, which means the market has this particular area for its breathing. So now you can just shift your stop loss to break even, so that if the market reverses from here, you don't get any loss, and the market has enough space, like 20 pips space, to just move in this. If from here this point, if it reverses now, then most probably it will hit your stop loss. So after the market has moved 20 pips in your favor, trail your stop loss cost to cost to protect the capital. And this is how I manage my trade. Then end of the day review, did I follow every point honestly? Did I respect my capital, my edge, my mind? Then journal the result and the read, and this thing, what is that, TPSL. Then update Excel. In Excel you have to update your entry point, exit point, your reason, all this thing. So next, there are news event mentioned in this checklist. So that's it, this was my strategy. So I'll just show you my real chart example so that you can understand the setup more better. Okay, fine. So here there is a buy side trade. which I have marked, okay, in Bitcoin, you can clearly see this is a 5 minute time frame. I'm like drawn the support, one swing, another swing, okay. Market has taken two swings from this support level. Now I shift to the 1 minute time frame. After shifting to the 1 minute time frame, I wait for minimum 2 candles to close below this level. So this one candle, two candle, fine, one criteria matched. Now I'll check whether the breakout is more than 20 pips or no. So from this point, the breakout is around 24 pips, right? So now what I have to do according to my checklist? Avoid the first entry here. This would be my first entry, right? If I would have entered here, then my stop loss would have been triggered. So I avoided the first entry, waited for the candle to give, waited for the market to give a second entry. I drew a minor trend line by joining this and this wick. As soon as market broke this trend line, reclaimed the level, I entered here and TP got hit. Okay, this was a 73 pips trade. So this was the example of following the checklist and my setup. If I would have not followed the 20 pip breakout rule, then I would have entered here, my stop loss would have hit, then it would go in my direction. So this is how you filter out your setups. Fine. So let's search for the sell side trade. Let's move to gold chart. Fine. In the gold chart, I'll just go for the 5 minute time frame first. So here I have marked the resistance level, one swing, two swing, okay. In the 5 minute time frame, I have marked this. Then I have went to the 1 minute time frame. I refined this resistance level so that I get a proper entry level, okay. So I have marked the wick plus 1% of the body. After this, I have waited for two candles to close above this level, okay. One candle, two candle, then a reversal. Then I have drawn a minor trend line. After the market broke this minor trend line, it just came below this level. I have just shorted, and in this trade the TP was around 1160 pips, okay. So this was one example. Let's look for the another example which I have marked. Okay, again a resistance in the 5 minute time frame. If you look at this resistance, then there are only three types, one, two, three, okay. In the 5 minute time frame, this is 1 minute time frame. So here what happened is it gave a breakout here, two candles closed, one candle, two candle, okay. Now here I'll check whether the breakout is more than 20 pip or no. Yes, one second. This is the topic, right? So the breakout is around 22 pips, right? So here what did I do again? I avoided the first entry, waited for a pullback. After this, I just drew this minor trend line. I entered at the second entry here, stop loss of 10 pips, and then just see the fall from here. Literally gold just crashed around 450 pips from here with a small stop loss of just 10 pips. Look at the risk to reward, 1 is to 44. So again, I followed the checklist of avoiding the first entry. If I would have entered here, stop loss would be triggered, then it would have went in my favor. So again, I followed my checklist and then entered at the second entry. TP got hit. So this was a live chart example for both buy side and sell side trades. Hope you understood my strategy. Look at this video again and again and again. I'll just uh, pin the link of my checklist in the description of this video. So hope you like my strategy. Watch this video again and again and again so that you can understand it better. Do join my live streams daily because I trade the same setup there with by following the whole entire checklist so that you can get the real-time examples also. See you in the next video. Thank you.